When William Ackman looked at Netflix and stepped in large yesterday, stock up this morning. His Apple and the others you follow, have their multiples been adjusted where they shift from buy to strong buy?
Well, look, I mean, these are all companies that have outperformed, the broader market by and large. And as I look across the technology sphere, clearly Apple's held in there better than many of the high growth, software names, other high, tech names. And so it's still trading at elevated levels relative to historical benchmarks. But on the other hand, you've got a company that's got a dominant market position, strong cash flow, and we think is still well positioned longer term. But this is one, candidly, Tom, that if there is weakness, it's one that we'd be more aggressive on.
So given the fact that you do expect it to outperform, how much do you become a rate strategist versus looking at the nuts and bolts, hardware and software?
Well, you got to wear, I guess, each hat. But to be clear, I'm not a rate expert. I think there's an assumption, needless to say, that we're going to see them continue to bump up. We're more focused on the fundamentals, of course. And I think on that front, we remain encouraged with the demand trends we're seeing. I think there was an interesting data point that kind of speaks to the long-term opportunity from Apple coming out of Verizon's earnings a couple of days ago, when they noted that just a third of their base is currently on a 5G device. Ultimately speaks to the multi-year tailwind for 5G for Apple. And we think we'll see a little bit of that this quarter, but we think we're still early in that cycle for the company.
That's the reason why I ask that, is that the fundamental story is really solid. And you talk about a 185 price target in a stock that right now has 159, just north of that in terms of where it stopped in the market yesterday. How much have we priced in, though, all of that dynamism if we do have perhaps the headwind of higher rates?
Well, look, I think at the end of the day, the key here are the demand indicators. Yeah, higher rates are something that can cause some fluctuations, volatility in the stock price. But that's one of the reasons we're looking longer term here on the stock. And we think that's something, that Apple can weather, as it can on the supply chain side, because that's actually probably more in focus right now for investors than perhaps rates.
Well, just on the supply chain and on the politics of the moment, there was a huge issue around this company and other companies too about their dependence on China and the production there too. How much has changed in the last few years, Will, for Apple?
Well, look, they have tried to diversify their contract manufacturing base and where they're receiving supplies. But there's no question they're still reliant on China, despite some of that diversification. So I think you should applaud the company for trying to diversify, but there is still a big reliance on China, right? Both on the supply chain front, but also on consumer demand, right? That's been a big source of growth and a huge, a market for them. So, while they've, moved away from China to a degree, it's still a very important market.